Eternal as well as Swiggy. There was strong demand to the Swiggy, QIP. The Swiggy stock comes up for you. That one too higher in trade as we speak. Good time to get in Sacchitanand Uttekar for a quick market check on the levels and individual stocks. Sachi.
Good morning, Mangalam. Clearly, I think market is divided right now. We have the banking stocks which are helping it, gain some traction on the positive side. But IT, on the other hand, has seen a lot of unwinding. So I think it's better to, maintain a long-short ratio when it comes to, trading positions. From a trading perspective for the Nifty, I think a closing about 25,860 would be mandatory to retain that, upswing that we have seen in today's session. On the lower side, it has maintained a good support near its 50-day exponential moving average, which is placed at 25,740. So unless this particular level holds, the bias still remains neutral to positive. But going forward, it will be very critical for it to regain its strength on a closing basis about that 58,860 mark, which is also the 5-day exponential moving average resistance now. When we look at Nifty Bank, 58,800 looks like a decent support, but on the higher side, 59,330, needs to be violated on a closing basis to revive the bullish momentum. So I think both the indices are pretty range bound, and that's why we expect some oscillation within this particular range itself. From a stock perspective, what we have recommended to our clients is a short on HCL Tech. We have already seen a negative divergence on its 60-minute scale. We have already seen the stock slipping below its 5-day exponential moving average support. The pullback towards 1666 would be a good healthy zone wherein fresh short positions can be deployed. The stop loss for the trade should be placed at 1674 on closing basis. We are expecting a swing towards 1600, 1610 kind of a zone. On the positive side, Kotak Mahindra Bank has displayed a good resilience. It is outperforming the Bank Nifty right now. If you look at the overall composition, 2100 support has been very critical. We saw the 50-day exponential moving average support also getting sustained there. And the revival has, started from that particular level itself. So we're expecting this particular momentum to stretch towards 2260. And hence we are recommending building fresh long positions, keeping a stop loss at 2162 on closing basis.
Okay. All right. Got that. Thanks a lot, Sachi, for joining in and giving us your quick take on markets as well as individual stocks. Let's turn our attention to our special segment.